Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For Elliott Wave Trading, our website is www.24elliottwaves.com. The title of this video is Elliott Wave Explained Step 2. Elliott Wave Explained Step 2. Alright, let's get started. We want to explain to traders a specific aspect of the wave theory. In this case, we want to explain to traders why the second Elliott wave should not cancel the first Elliott wave. Alright, so if you have already know about this, I invite you to stay with us as I'm going to tell you some very interesting things. So stay with us. Alright, here we are. We see this is a Microsoft stock on a monthly chart, and I have highlighted here the first Elliott wave. Now, as always, as I say to traders, feel free to disagree with my wave count. Alright, so following our guidelines, so in fact you can go to www.24elliottwave.com and you can follow wave counts guidelines. I show traders 6 specific guidelines that trader can follow to start counting Elliott wave like a professional traders. The thing that they need to pay attention to improve their wave count. So here I counted the first Elliott wave because we see here there was a cycle. So one of the guidelines is that a new cycle can start, not always, but can start at the end of a previous cycle. 1 second, please. My screen is a little bit frozen here. Trying to get my tools and. Okay, let's move on. Hopefully we come back to normal. Okay, so this is my first Elliott wave because we see there was a cycle. So the cycle is trending first, followed by corrective first. So correction 1, 2, 3. So you see the zigzag. You can 1, 2, 3. All right. So the trending first, followed by a correction that has ended here. So when a cycle has ended, we can have a new cycle that is starting straight away, or we can have another consolidation. The market may consolidate again before a new cycle will begin. But all depends on the fundamentals and the market environment. The end of a cycle does not mean that a new cycle will definitely start. A correction may continue for a long period of time. We have a complex correction. When a correction is completed like this, this is what I say to traders, the wave count is dynamic. As we are calling this the first Elliott wave, if the music has changed, we may have another correction taking place, which will bring us to what we call a complex corrective waves. All right. So one step at a time, we will label a wave. But if the music has changed, we just flow with the market. Okay? 1 second, please. My screen is frozen. I will try to see what's going on here, and then we'll go back to you soon. Let's continue. As you can see, this is my first Elliott wave from here to here, all right? And according to the wave principle, the wave theory, all right, the second Elliott wave should not cancel the first wave, which means the second wave that is underway here should not come all the way to the starting point of the first wave, or to the origin. This is, so you see the orange, the yellow horizontal line, that's the origin of my first Elliott wave. So you can see that the price start going down now, all right? So we have a consolidation, a breakout, all right, which according to our guidelines, this is the first Elliott wave, all right? First Elliott wave, one step at a time, but the second wave should not cancel the first wave, which means coming to the origin or the starting point of the first wave. For Microsoft stock at this stage, it's very important for us to go to Google Finance and to check the economy news, perform Google Asset test for Microsoft stock, and to analyze, okay, the financials and see exactly what is taking place. To also consider the competition, because this is the technology sector, all right, whether the second wave will cancel the first one, or we will have another okay, second Elliott wave. All right, so we can see here we have a two event that is taking place here. If you allow me to say that, we have a cycle that has ended here, and we also have a consolidation and a breakout. This is an excellent point to start counting Elliott wave. Now, since last year, I was calling Microsoft a bullish cow when the stock was still somewhere here. I was saying to traders that this is a bullish cow, Microsoft bullish cow. Okay, so we see the first Elliott wave is now in place. All right, but looking at using again our characteristic, the characteristic of the first Elliott wave right here. All right, look at this first Elliott wave. Look at it carefully. Okay, now this first Elliott wave has broken resistance on the left hand side. You see this resistance, this resistance, this resistance, this resistance, but there is one major resistance here, which is the peak of the previous trend. All right, it's not far from you see. So if I draw a line there, you can see what I'm trying to explain to you here. You see, we are in a resistance zone. All right, so though our first Elliott wave has broken resistance on the left hand side, talking about our consolidation here, there is another major resistance here. What you should remember, whenever you see a resistance like this, just picture in your mind, okay, sellers. Does it make sense? So whenever you see, like here, just imagine that there are people waiting there to sell Microsoft stock. That's what I want you to picture, to imagine that, okay? So whenever we see a major resistance like this, just think of people waiting there to sell, okay? So the same as you can see that though the first Elliott wave has taken out all this resistance on the left-hand side, this major resistance level is putting pressure on Microsoft right here. There is a high chance that we may see that the second wave may cancel the first wave. Sometimes the reason why the first wave may cancel, the second wave may cancel the first wave is because of other resistance that are on the left-hand side. So we may end up having a complex first wave. In that case, the second wave may not cancel it completely, so the price may go down, okay, to retest probably the top of the consolidation, which is very, very important. Okay, if you retest it, that's not too bad, and it start going up, okay, so which means the price is going up step by step because of this resistance here. You see, so either the second wave in this case may cancel it, which is a violation of the wave principle. Why does it cancel it? It may cancel it because of this resistance here. It may cancel the first wave because of the fundamental, the financials. They cancel it just because of the market itself, the S&P 500, and the market leaders for the Nasdaq 100 and the Dow 30, okay? All right, so there are different reasons why the second wave may cancel the first wave. In this case, for the Microsoft stock, there is a bit of chance that we may end up canceling our beautiful first Elliott wave. If that is the case, we will restart counting Elliott wave right here. All right, so it doesn't mean that the trend is finished completely, or there is no hope for a new trend to begin. It's just sometimes because of the resistance on the left-hand side, the price pushed it first time, couldn't succeed, and then the bear came out, and they sell it, push it back down, it canceled the first wave, and then the bull take it again, and they try to push it out, and at one point, they will try to break this resistance. If they couldn't succeed to break this resistance here, the price may prefer a better support level. So they will bring it back down completely, okay? So the bear may push it back down completely, okay, in that case. Are you with me, okay? In that case, what we will do, we'll use the market geometry if it goes below this channel. We project the channel to the downside, and that will be our target right here, okay? For the bearish projection, okay? So you understand what I'm trying to explain to you. Now, there are different reasons, okay, why the second wave may cancel the first wave, okay? But it doesn't mean that the trend is kaput, so to speak a bit of German to you, all right? So it doesn't mean that the trend is kaput, but it just, because the price struggled a bit, okay? The market acknowledged key level, professional trade around key level. So this is a very, very important resistance zone. So it's not by mistake they push it out first area wave and they were approaching, everybody saying, no, I'm out before reaching the peak of this zone. So they're all coming out now, okay? They're all coming out. So the market environment will play a lot at this point in time. Microsoft should be, okay, keeping up, okay, with the pressure, bringing out excellent news, okay, all right? The fundamentals should align to give confidence to the market that we can go push it above the high of 2000. All right. If there's nothing exciting talking about innovation, all right, great economy news, okay, the financial improving, market share, market environment, all right, there's a high chance that we may, okay, say, okay, leave it for now. So which means we cancel the first wave. And then we come back again and look at the fundamental, the market environment. Is there some demand for it? One thing also we can do at this point in time, we can also put on our chart the volume bar, okay, to analyze the volume bar and go into the mind of other traders, okay. I will not do that in this video because this is not the purpose of this video. So I will just mention it to you, okay, all right. I will just mention it to you and see what has happened, what is happening, the surge in trading volume, all right? There's a bias here before. You see, these are the bias, okay? Surge in trading volume, normal volume, surge in trading volume, and a breakout here, all right? So this is a normal first area wave, okay? But there is a risk that the second wave may cancel the first wave, and if the second wave cancels the first wave, we might restart counting the wave. As you can see, following our guideline for wave count, a cycle has ended, okay? And then the price did not start a new cycle straight away. There was a little bit more consolidation, in fact, all right? And then we see now the first area wave that has broken the resistance. But ahead of us, there is a major resistance here, which is putting a bit of a damp on this first area wave. That's what I'm saying to you. There's a high chance that we may cancel it and restart again, unless there is a strong fundamental. There is another scenario that I want you to understand. Is that sometimes the second wave may not cancel the first wave, but we may have a complex first wave. So what I'm calling now first wave may not be the first wave itself. It will be instead the first minor wave of the first wave itself. So this can be the first wave of a complex, bigger first wave. So because the market is acknowledging resistance and the market condition at this present time, the complex wave are formed because of the market sentiment, the market environment, and the key resistance and support on the chart. So as you can see, the price went up, but there is a resistance here. The market is acknowledging this resistance here, and we have the second wave that is pulling back now, all right? If there are more bearish pressure, if there's no fundamental reason for this trend to continue, there's a high chance that the second wave may cancel the first wave. But it doesn't mean that when the second wave cancels the first wave, that the trend is finished. The trend may pause, all right? So we will start again afresh, and a new trend may begin again. As I explained to you, a correction can be complex sometimes. This is one of the mistakes that traders are making. As we start calling this now the first wave, do not stick to it. Do not think that this is it, this is the end of it, this is what George has said. The music may change completely, and the price may break it down completely to the level of a 10, 16 pushing it back down. If there is no demand to, or no support, no, okay, reasons to continue the trend. If there were many attempts, okay, what does some price try to break the resistance, couldn't many times. The bear are watching. Remember what I said to you, see a resistance like this? Imagine, picture people, visions, people selling there. All right, so there are people here selling. They sold it here. See how the price dropped fast. This you see this bearish one here, okay, drop fast. But you see this is a high volatility, which is great. So at this point in time, what I can say to traders is this: because of this long candle, it's a long volatility. One can draw. You see a volatile candle. One can, you see these traders are smart, okay. All right, a volatile candle like this. A high volatility is usually followed by low volatility. Okay, it's something else I want to share with you now. A high volatility or usually followed by a high volatility. So here traders can draw in one line, which is the line I'm drawing now for swing traders. So we may say priority to bullish signal above the level of level of $40, okay? Because there was this high volatility, you see the price bumping on that level. So we can use a top-down trading method to try to enter the trend, or we can be very patient, just wait patiently, draw a common straight trend line like this, and wait for it to close above it, and then use a top-down trading method to take it from there. But as I explained to you, according to the Elliott wave theory, there's talking about Elliott wave explains step 2, the second wave should not cancel the first wave, but there are reasons why the second wave may cancel the first wave. All right, it makes sense. It's also powerful. There are fundamental reasons. There are technical reasons. Technical reasons talking about key support or resistance zone. All right, can influence, okay, the second wave. All right, fundamental reasons, the financial, okay. All right, the balance sheet, the cash flow, the business, the market share, the competition, the management, the market environment, the market sentiment, all these will influence whether the second wave will be, okay, a deeper second wave or a shallow second wave. All right, it makes sense? All right, it makes sense? All right, so in the first part of this series of video that we call Elliott Wave Explain Step 1, which I believe you have already watched, we were talking about, okay, how to use the wave theory when the first wave is extended to forecast the market. In this video, we are talking about the second wave, okay, the rule that stated that the second wave should not cancel, okay, the first wave. The implication, okay, about that rule and how we can interpret it, how we can use it, and understand it and apply it like a professional trader. All right. So this is something that I can look at now. This is my first Elliott wave for Microsoft. At this stage, one will go to Google Finance or Yahoo Finance to perform Google Assist test and to check the economy news. Okay. All right. There's a risk because of this resistance here that the second wave may cancel it. If the second wave did not cancel the first wave, in this case, there's a high chance we may have a complex, okay, first wave, which will probably, if he finds support here, he will attempt now to break it. You see here, if he breaks this resistance, he will try again to retest it because this is a very critical resistance zone. So what is likely to happen is that we may see a complex, okay, first wave if the trend is about to continue, which means the market did not push it straight away up, okay, you go gently, okay, one step at a time. So we acknowledge the zone. We see we couldn't reach the top. Now we pull back a bit. If we find a support without canceling the first wave, okay, let's continue. The market will attempt now to, the bulls will try to break this resistance. By all means, it is very important to break it. But there's a risk also, pay attention carefully, my friend, that the whole thing that I'm calling now first wave may end up being completely another correction, which means the price may go and stop here, forming a beautiful double top. In that case, that will be a capitulation, and the market will respond. If Microsoft forms a double top here, do not forget, so that's why I say to traders, be ready to buy and be ready to sell. In that case, if you display double top here and couldn't break it at all, so pull back, even if you cancel it and try again and come to display double top without breaking above it, okay? So in that case, we will have a total capitulation and we may have, okay, my friend, okay, a beautiful double top. And in that case, the bear will respond and use a top-down trading method to sell Microsoft. All right. So the challenge for this trend is the resistance at 53. Let's call it 53. All right. It's 52.94. Let's call it $53 zone. This is very, very important. All right. This is putting pressure on this second wave. So as I explained to you, we may have a complex, okay, first wave, one scenario. So, okay, I don't want to move this line, okay. All right, so we have 1, 2, 3, 4, 5. He does not have to do it, okay. That's one scenario. Another scenario is that the price, where it is now, will come back down completely and cancel the first wave. So come back here straight away, or even pushing it down to this, okay, projected channel here, okay. One step at a time, that's why we use a top-down trading method without violating the market pattern. All right? At this stage now, how do we control the risk? You see this channel here? We project it to the upper side. Here we are, because the price breaks above it. We set targets. Okay? First target, minimum target, right there. Okay? Second target is here, above the resistance level. We will see whether the price will hit that target or not. But it's a big challenge as things stand now. It makes sense? It is also a powerful. This is about Elliott Wave Explain, step 2. I invite you now to follow me in the next video when we will be talking about Elliott Wave Explain, step 3. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. But put a comment below. This will help us to improve our recording and put us under pressure to give you excellent quality videos. If you truly love this video, all right, feel free to share it on Google+, on Twitter, on Facebook, on the web. You can even embed this video if you have a website. If you have any comment, please put it below. If you have any question, you can contact me at 24 Elliott Wave. Click on Contact Us and send me, okay, a short email. And I may record another video, okay, to answer your question. We are the GSTW24 traders talking about Elliott Wave Explain, step 2. All right, until the next time, enjoy yourself and be very happy. We are the GSTW24 traders. Speak to you soon.